Welcome back to Money Moves University. I'm James Jackson III. I grew up watching my family make hard financial decisions with limited information. This show is what I wish they had. Today, I want to have a conversation with you. The kind of conversation I wish somebody had pulled me aside and had with me when I was young. When I got my first real paycheck, I didn't fully understand the financial system. Like most 16-year-olds, I just did what my parents did and told me to do. It wasn't necessarily wrong. I just didn't know what all my options really were. And of course, that was a while ago, and there weren't nearly as many options there are today. Not really trying to age myself here. But the reality is that nobody sits you down and explains to you how the financial system actually works. You're just expected to figure it out or follow what your parents did. But while you are figuring it out, it could be costing you. So pull up a chair. Let's talk. Imagine you're 22, or maybe you are 22, and you just landed your first real job. Not a summer gig, not part-time, a real job with direct deposit and a benefits package and taxes coming out before you ever see the money. And your first paycheck hits, and you're sitting there looking at it. And two things happen at the same time. You're excited, and you have absolutely no idea what to do next. Do you open a bank account? You already have one from when your parents took you to the bank at 16, but you do not really know what kind of account it is or what it costs you. Do you use Cash App? Yeah, I've been using that for years to pay friends back for pizza. Can you just keep doing that? And then your cousin tells you, hey, if you're ever short before your next paycheck, there is a place on the corner that will float you some cash. That is the moment. That is exactly where this conversation needs to happen. Because every decision made in that moment, where you put your money, how you move it, what you turn to when you are short, is either going to cost you or build you. And you cannot tell which is which unless someone explains it. So, let me be that person. You're welcome. First question you have to answer. Where does this money actually live? Today, you have 4 options, and I'm going to walk you through each one, not as a financial textbook, but as somebody who has worked inside these institutions and knows how they think. Option 1 is a traditional bank. You know these: Chase, Bank of America, Wells Fargo, your local bank. These are for-profit companies. They're in business to make money, and one of the ways they make money is from you. Now, that doesn't make them evil. A lot of people have great accounts at traditional banks. Some accounts have no fees at all, especially if you have direct deposit set up, which we all do. I hope you do. You need to read what you are signing up for. There are monthly maintenance fees, overdraft fees, minimum balance requirements. Those details matter. The big upside is convenience. Branches everywhere, big ATM networks, everything under one roof. Option 2 is a credit union. A credit union is a not-for-profit. It is owned by its members, which means you. Because there are no shareholders to pay dividends to, the money comes back to you as lower fees, better loan rates, and higher savings rates. Your money is just as protected at a bank, federally insured up to $250,000. You have to qualify for membership, but honestly, most people qualify through where they live, where they work, or where they worship. It is easier to get into than people think. Option 3 is an online bank. No branches, hardly any overhead. And because of that, most of them charge nothing. No monthly fee, no minimum balance. And their savings rates, this is the one that surprises people. A high yield savings account at an online bank right now is earning 4 to 5%. A traditional savings account at a big bank earns about 0.01%. On the same $1,000, that is the difference between $1 and $40 and $50. Same money, same federal insurance, different account. Now, option 4, and this is the one I need you to hear clearly. Venmo, Cash App, Zelle, these are not banks. I know they feel like banks. You can send money, You receive money, even get a debit card. But they are payment apps, and the money sitting in those apps is not federally insured the same way a bank or credit union is. If something goes wrong with the company, your balance could be at risk. Use them for what they're good at: splitting a check, paying a friend back, moving money fast. But do not use them as your primary financial home. That money should be an account that is built to hold it. Put your money somewhere that protects it, then use the apps to move it. Now, let me tell you what happens when you do not have the right setup, because this is where I have seen real money disappear from people's lives. Scenario 1, you do not have a bank account at all. So when your paycheck comes, you cash it. The check cashing place charges you 1 to 3% of whatever the check is worth. For example, on a $2,000 check, that is $20 to $60 gone before you buy groceries, before you pay rent, before you do anything. Do that every 2 weeks for a year, and you handed $500 to $1,500 to a check cashing store for absolutely nothing in return. Scenario 2, you're in the wrong bank account. You go negative by $12 by buying lunch on a Thursday. The bank covers it and charges you $35 for the favor. That is a $35 fee on top of a $12 lunch. That's an expensive lunch. If that happens 2 or 3 times before your next paycheck, you're looking at $100 in overdraft fees in a single month. That is not a bank helping you. That is a bank profiting from a rough week. Now, some banks and most credit unions have either eliminated overdraft fees or let you opt out so the card just declines instead. That option exists, but you have to know to ask for it. And then there's the cousin's advice, the place on the corner. Payday loans are the most expensive money you will ever borrow. Here's exactly how it works. You borrow $300 and agree to pay back $345 in 2 weeks when you get paid. That $45 fee sounds survivable, but $45 on $300 for 2 weeks works out at an annual percentage rate of 400%. Your credit card, even a bad one, charges 25 to 30% APR. A payday loan charges $400. But the fee is not even the real danger. The cycle is. You pay back $345 on payday, and now you're $345 short for the rest of the month. So you borrow again and pay another fee. More than 80% of payday loans get rolled over within 2 weeks. Most people end up paying more in fees than they originally borrowed. If you are in a payday loan cycle right now, there are better options. Credit unions offer payday alternative loans capped at 28% APR. Many employers have paycheck advance programs at no cost. Apps like Dave or Earnin can advance you $25 to $200 against your next paycheck with no interest. Community organizations often have emergency assistance for this exact situation. Any of those is better than 400%. The payday loan place on the corner is not there to help you through a rough week. It is a business built on the rough week never fully ending. So here's what I would tell that 22-year-old. Here's what I would tell my nephew or younger self or anyone sitting across from me with the first real paycheck and no math. 1, open a real account if you do not have one. A credit union is my first recommendation. Find one you qualify for. Most have no monthly fee and no minimum balance. If you have had banking issues in the past, a closed account, overdrafts that went south, ask about second chance checking. It does exist. 2, if you want a high yield savings account, look at online banks, Ally, SoFi, Marcus, Discover. Open a savings account and set up an automatic transfer from your checking on payday, even $25. You're not trying to get rich. You're trying to never need a payday loan. That is the goal. 3, use Cash App and Venmo for what they are made for. Paying people back, splitting bills, getting paid by a client. But when the money lands, move it to your actual account. Do not leave your savings in an app. If you are short and it feels like the only option is the payday loan place, stop. Call your credit union first. Call your HR department. There is always something better. The right financial setup does not make you rich overnight, but the wrong one will quietly drain you for years while you wonder why nothing is adding up. Here's what I know to be true after 25 years in the industry. The people who win financially are not usually smarter. They're not usually luckier. They just got the right conversation at the right time. Somebody pulled them aside and explained how the game works before they lost too many points fighting out the hard way. Today, I tried to be that person for you. So, here's your action step this week. Look at where your money currently lives and moves. Your bank account, Cash App balance, any of the prepaid cards, write it all down. Then I want you to ask yourself, is each one protecting my money or is it costing me to use it? That audit takes 10 to 20 minutes and it could save you hundreds of dollars a year. And if you know someone who just got their first real job, or someone who is still cashing checks, or someone who has been in a payday loan cycle they cannot seem to get out of, send them this episode. This conversation is for them. And if your organization is looking for financial education that has these kinds of real conversations at scale, visit moneymovesuniversity.com. And then next time on Money Moves University, we talking taxes. What nobody told you about April 15th. Now that you have the goals, the budget, the income, and the right account, this next episode, we make sure the government is not taking more than they should. I'm James Jackson III. Have the right conversation with someone today, and I'll see you in the next episode.